Hello, good morning, Anandal.
Good morning.
ma'am.
Good
Good
morning.
morning, ma'am.
Good
Good morning,
morning,
ma'am.
ma'am.
Morning, ma'am.
Good morning, madam.
Good
I'm
morning,
trying
ma'am.
to.
Good morning, ma'am.
We have a cyclone, I think Pondicherry and Chennai cyclone is going on. I wanted to share my PPT. I'm talking from my phone, mobile phone. Uh, Here, no current, nothing. So I have only 50 percentage charge. I will start the class. Suppose anything goes in middle of the class, you don't mistaken me. This class I will compensate next week. Okay.
Okay.
Sure, ma'am.
Okay,
Okay, ma'am.
How to share PPT? I don't know.
ma'am, directly open. Your screen already shared.
I have opened in my mail that PPT.
I
Uh,
download this. Yeah, not open directly.
can you
Directly open.
able to see this
Yes, ma'am.
Yes, yes, yes. Kindly
PPT?
Visible.
open
Yeah,
this.
it is visible, ma'am, now. PPT is visible.
PPT you can see.
Yeah, we can see, ma'am. We can see.
Yes, ma'am.
Yes. We can able to see, ma'am. Yeah.
Yes, ma'am.
Okay. Last class we have studied basic accounting concepts, conventions, journal, ledger, trial balance, adjustments, entries, everything, right? Today let us prepare final accounts. How to prepare it? That specimen is already I have shown. These are the adjusted ledger accounts, and then see here. This is the problem. Can you see this trial balance from the following trial balance? Prepare trading profit and loss account for the year
Yes, ma'am.
ended
Yes, ma'am. We can
2020.
see.
It is visible. Yeah.
Okay, okay, okay. So this is the trial balance is given in your problem. The adjustments are given. Provide wages for rupees 5,000. Write off 5% depreciation on freehold premises and 10% on office furniture. Insurance to the extent of rupees 200 belongs to 2010. Closing stocks charge interest. These are all the adjustment entries, right? So now you have to prepare trading profit and loss account. You have to write heading trading and profit and loss account for the year ending 31st December 2009. Okay. So, hello. Then first left hand side trading account you have to start with opening stock and end with closing stock. You have to find out whether gross profit or gross loss in the during account, trading account. Okay. So opening stock will be always given in the trial balance. Closing balance always given in the adjustments. That you have to keep it in your mind. See stock as on 1/1/2009 10,000 is given. Not 10,000. No, 46,000, sorry. 46,000 is given that you have to write it, right? Then purchases given in your problem that is 1,50,000 and returns, purchases and purchases return. Purchases return are otherwise called as return other return outwards. Sales return we call as say return inwards. So return outwards always credit balance that 600 you have to deduct it in the trading account. So 1,50,000 minus purchases return 600 you deduct it 1,49,400 you have to write in the outer column. Okay. Then you have to write any other direct expenditure. What is the direct expenditure? Wages, after fuel, or like that, right? So here wages is given 14. How much is given? Wages 25,000.
25,000.
So here in adjustment, you have to
25,000,
see
ma'am.
whether is that outstanding wages or not. See here, outstanding wages given 5,000. So 25,000, if it is outstanding, you have to add. If it is the prepaid expenditure, you have to deduct. Okay, outstanding wages you have to add. Prepaid, if it is given, you have to deduct it. Okay. So wages are 25,000 plus
Ma'am, where
outstanding
did the
wages.
first one went?
Huh?
Drawings was there, no? First one, drawings.
First one you don't take. You have to take in trading account. What are the items you have to take, right? Don't go by trial balance. You have to prepare, go by your trading profit and loss account. Okay.
Okay, ma'am.
See here, then wages plus outstanding how to take. There is no APRA, fuel, import duty, then return inverse, sorry, goods inverse, nothing is there. So, okay. Now come to the credit side. Sales. Sales is given 2,08,000, right, in your trial balance. You have to deduct sales return 500 is also given, right? Sales minus sales return. 2,08,000. Sales is always credit balance. Sales return or return out inwards debit balance. Okay. So 2,08,000 less sales return 500. You have to deduct it. So then you have to write the net amount in the outer column, and closing stock you have to write. Closing stock is given in your adjustments, right? Closing stock 52,000. Now you have to close the trading account. If your credit balance exceeds your debit balance, that is called gross profit. Suppose your debit balance exceeds your credit balance, that will be gross loss. See here, your credit balance comes 2,59,500 minus this opening stock, purchases, wages, all these things. If you are deducting, your gross profit is 34,100. Okay. Then the gross profit you have to bring into the profit and loss account. Profit and loss account, no need to write a heading separately. You have to continue in that, because in the heading itself we have written trading and profit and loss account, right? So bring gross profit account, that is 34,100. Debit side you have to write all the expenditures which are given in your trial balance, as well as you have to adjust the adjustment entries, right? So let us see trial balance. Trading expenditure 840 is given, you have to write. Then painting, stationery and advertisement 1,640 you have to write. Then professional charges is given 280, that you have to write. Then salaries 14,000 is given. While writing salaries, you see your adjustments, whether outstanding salary or prepaid salary. If it is given outstanding salary, if it is given, you have to add. If it is prepaid, you have to deduct it. Okay. Then salaries, nothing is given. Then discount. Discount, what it is given? 6,300. See here, both the thing are given. Discount allowed and discount received. What is discount allowed? What is discount received? What is discount allowed? What is discount received?
So discount whichever we have given during the sales, and discount received is from the other side.
Yes, when you are making credit purchases, say for an example, you have to pay 10,000 rupees. Two months credit period given by, allowed by your creditor, right? So they are asking, if you are paying within 1 week, I will give you 1,000 rupees discount. Instead of paying 9,000, 10,000, you can pay only 9,000. 1,000 rupees he is discounting. So it is a benefit, right? Discount received. This is called discount received. Same thing if you are allowing to your customer, when you are making credit sales, your credit sales, you are making 20,000 to Mr. X. You are given credit period 3 months. If you are asking him within 2 days, if you pay, I will give you 5,000 discount. So 15,000 instead of 20,000, he will pay you only 15,000. 5,000 discount is loss for us. Discount, that is called discount. Loss is to be treated as an expenditure, right? Gain you have to write in the profit and loss account credit side. So loss discount allowed you have to write in the profit and loss account debit side, that is 6,300. Discount received you write in the credit side of your profit and loss account 4,600. Okay. The next one, rent rate and insurance 4,000 given. Rent rates and insurance 4,000 given. See your adjustment. Insurance to the extent of rupees 200 belongs to 2010. That means 2010 you have to pay insurance 200. That you have paid in advance, prepaid, paid in advance this year. That is to be treated as prepaid expenditure. That is to be deducted from the respective account, right? So rent, rates and insurance 4,000 you have 4,000 minus 200 you have to deduct it. That is 3,800 net amount you have to write. Then next interest on capital. See here, interest on capital, is it a expenditure or income? Interest on capital, suppose instead of your own money, if you are borrowed from bank or somebody else, you have to pay interest. In economics we used to call it as opportunity cost, right? That is treated as an expenditure. You have to write in the debit side of profit and loss account, interest on capital 5,735, right? Then interest on drawings, suppose interest on drawings, if it is given, that is income to the business, that you have to write in the credit side of profit and loss account, right? Then depreciation. What is depreciation? Depreciation means that is devaluing the asset value, right? When you are utilizing your assets for the business, that's value will be diminishing every year. That is called depreciation, right? So that is to be treated as an non-cash item and treated as an expenditure in the profit and loss account. So depreciation sometimes, most of the times, will be given in the adjustment. Some percentage you have to calculate on the respective assets. See in your adjustments, 5% depreciation on freehold premises, 10% on office furniture. So see your freehold premises is given 38,600 into 5%. So that is 1,930, right? So depreciation on furniture is 10% is given. So what is your furniture value? What is your furniture value is given in your problem?
300.
3,050.
3,050. Office furniture 3,050 into 10%. So 305. Depreciation is 305. You have to write. Then credit side you have to write commission received. Commission received. Commission received and then interest on deposit. Interest on deposit. See your
Excuse me, ma'am.
yes.
Sorry to cut you off,
Your
but I wanted to know
investment.
in the trading account.
See here, investment as on 1st January at 10%, 4,000 investment, right? So 4,000 into 10% is how much? 400, right? So 400 you are supposed to get interest on your deposit, what you have made investment. But in your trial balance, interest on deposit, it is given only 200. So 400 you are supposed to receive it, but you have received only 200. That means what? Income accrued, interest accrued but not received. So that added, that is treated as an income, right? So interest on deposit 200 plus accrued interest 200, so totally 400. Then discount received also you have to write. Now you have to close this account, ledger account, profit and loss account. Now you have to see what is the balance. Credit side of your profit and loss account exceeds your debit side, that balance is called net profit. Suppose your debit side exceeds your credit side, that balancing figure will be net loss. Okay, so what is your net profit in this problem? 7,570. Okay.
Excuse me, ma'am.
Next, you have to prepare balance sheet. Balance sheet, you see, debits, left hand side liabilities, right hand side assets. Left hand side, if you are starting with capital assets, you have to start with fixed asset, right? So here, capital, what is given? How much is given capital? See your trial balance.
11,000.
1,14,700. See your capital. See here. Credit balance 1,14,700. Right now, this is the opening capital plus net profit minus drawings. That is the closing capital. Right. See here, capital 1,14,700. You have to add net profit. Already we have find out 7,570 plus interest on capital. If you have that, you have to add it. Interest on drawings, if it is there, you have to deduct it. Okay. So interest on capital already we have written in profit and loss account 5,735, that you have to add it. So total 1,28,005 less drawings, and then less interest on drawings, if it is there, you have to deduct it. Less income tax also you have to deduct it. Income tax you can deduct either here, or you can put it in the profit and loss account debit side also. Nothing wrong. Right there, either there, or we can deduct it from the capital. Okay. So
Ma'am,
net
how did
amount
you
or
get
net
the number
huh?
ma'am, how did you get this net profit number of 7570?
Yes, yes. That you have to
From where
add
did
it.
you get? What all you have
See,
to
the
add it?
profit and loss account we have calculated, we have found it 7,570. That you have to add with the closing capital.
Where is
Opening
the closing
capital you
capital?
have 1,14,700, right? You have to add net
Okay.
profit, deduct with drawings, that will be the closing capital, right? So net profit you have to add it, that is 7,570 you have to add. And also not only that, you have to add interest on capital also, you have to add it. Suppose interest on drawings, if it is that drawings and interest on drawings, you have to deduct it from the capital. That will be the closing capital or adjusted capital, right? That you have to write in the outer column, right? So net income tax, either you can deduct it from the capital, or if you are not deducting, you can before finding out the net profit, you can shown in the profit and loss account debit side also. That is also correct one. There is nothing wrong in it. Okay. The next one, you have to write current liabilities. What are the current liabilities? Sundry creditor. Sundry creditor, see your trial balance. Sundry creditor is given 29,000. Then bills payable, and then outstanding wages. While you are preparing this statement, you have to keep it in your mind. What are the items are given in your trial balance? That will be you have to taken in only one place, either in trading account or profit and loss account or balance sheet. It will be taken place only one time, right? So what are the items are given in the adjustments, that you have to take in two places. It will be adjusted in trading account and profit and loss account, or profit and loss account and balance sheet, like that, right? See your outstanding wages. Outstanding wages will be placed. One thing is you have to add in the trading account debit side along with wages, and also you have to shown as a current liability in the liability side of balance sheet. Okay. Then
Ma'am, please go a little slow. Everything is bouncing. Nothing is understanding.
huh?
I'm not understanding anything because this is not accounts which never have studied before, and everything is bouncing. I'm not able to get everything, all the numbers from where it is taken, how it is calculated.
This call is now being recorded.
It will be the first time when you are hearing, you will be that is unknowingly, those who have no subject knowledge, it will be like that only. You have to practice, you have to read out the terms, and then you have to go through your textbook. You practice it many problems, then only you will come to understand. First time you will not understand, just you listen. Okay, what I am saying, you have to listen. Then come to the asset side. Asset side, you have to write fixed assets. So what are the fixed assets are there? See your trial balance, freehold premises, depreciation. I already told you depreciation given in the adjustment, that you have taken in the profit and loss account debit side, as well as you have to deduct from the respective assets in the asset side, right? So depreciation on freehold premises we have shown in the profit and loss account debit side 1,930. That is 5% on your asset. That you have to deduct it from the respective asset net value. You have to shown in the asset side. Similarly, furniture, office furniture 3,050 less 5%, 10% depreciation. We have shown in the profit and loss account debit side, and you have to deduct it and the net amount you have to write in the outer column. Then closing stock. Closing stock, it is given in your adjustment. One thing you have taken in the profit trading account credit side, and also you have to shown as an current asset in the asset side. Two places you have to write it, right? Then debtors. Debtors, you have to see what is given. 36,000 is given debtors in the trial balance. Debtors minus, you see your provision for debtors. Provision for debtors, which is given in your trial balance. Provision for debtor, you have to deduct it. What amount you have to write? Then you have to write other current assets, that is bills receivable. Then investments. Investments, while writing investments, 4,000 is the given in your problem. 400 interest accrued. Out of that, only 200 you have received. 200 accrued but not received, right? So accrued but not received, you have to add with the investment value. So 4,000 plus 200, that adjustment you have to add it here also, right? The next one, prepaid insurance. Prepaid insurance 200. Prepaid insurance is always taken as asset. Outstanding wages, outstanding salaries, liability. So you have to write
Sangeeta, please mute
then
yourself.
our bank balance and bank balances you have to write. Now you have to make the total of liabilities and assets of your balance sheet. It should be tally. You have to get same amount. Otherwise, it will be wrong. Okay. Do you understand this?
Yes,
Ma'am,
ma'am.
Ma'am, I have one question.
I have a doubt.
Is calculator allowed in the examination? Can you please tell?
Yes, calculator is allowed. Only simple calculator, scientific calculator and all will not be allowed. Only simple
Okay,
calculator
ma'am.
will be allowed. Mobiles are not
Okay, ma'am.
allowed.
Okay, ma'am.
Ma'am, I have a doubt, ma'am.
Yes, ma'am.
Ma'am, in this question they have told us 2010 is advanced, no, ma'am. It's not prepaid.
Ah.
So why we are putting as prepaid, ma'am? It is advanced side, ma'am.
Advance means you have paid in advance. Next year only you have to pay. If you have not paid, that cash will be in your hand. That will be shown as an cash, isn't it?
Yes, ma'am. But we paid advance, right, ma'am? For 2010 now itself we paid.
No, 2000 pay. So generally, insurance we used to pay financial year. That is April to March. But if you are preparing calendar year, that 3 months next year will be 1 year premium will be paid. That next year 3 months will be added in this current year. That is why it is treated as a prepaid insurance.
Okay, ma'am. For insurance alone, we must put it as prepaid because we have to pay in that year, right, ma'am?
Yes, you have paid next instead of paying next year, you have paid this year, that is included. 3 months next year, 3 months amount is included this year. So that is treated as an prepaid expenditure. That means you have paid in advance. That is treated as an asset, current asset, right? So that is why we have to prepaid insurance. You have to deduct it in the profit and loss account, and also you have to shown as an current asset in the asset side. Outstanding expenses means what? You have to pay but not yet paid. That is liability to pay. So that is why we are adding in the respective expenditure account in the trading profit and loss account, and it is to be shown as an current liability in the balance sheet side. Okay.
Okay, ma'am. Ma'am, can you please show the question, ma'am?
Yes. This is the question.
Ma'am, can you share the format of trading account, P&L account, and balance sheet? What are the line items
Yes,
which will go?
format
That
I have given in this PPT, ma. I have given in this PPT. We can take from our university website, DDE Pondicherry University website. It is already uploaded the same PPT. You can download it
okay,
and see. Okay.
sure.
Madam, in DD website, last year question was not found, ma'am.
The same thing only.
Okay,
Same
but it
thing.
will
Same
be
thing in the
useful
same
for us, ma'am.
syllabus. Nothing is changed. If it is changed, we would have changed. Na?
Okay, but
Accounting
past
for
year
manager
question
is
not
same. You
found, ma'am.
download it. Okay.
Okay.
Ma'am,
So
in
let's
exam we
go
have to make
about
all
the
these
problem.
tables.
We have no time. Only 6 hours. We have to complete all the syllabus. So if you are taking much time, we cannot cover up all the syllabus. Okay. So let us go one more problem. Then next I will teach you next unit or depreciation or something. We will go. Okay. If you are cooperating with me, then only we can cover up all the entire syllabus, right? See the next problem.
Ma'am,
Ah.
can I take few minutes just because I'm a non-accounting background and it is really very difficult for me to understand everything.
You have,
So
so in that case, nearby any faculty from accounts background, you can go for personal coaching. Just 1 week, 10 days, if you go, you will come to familiar of that words. No other go. We cannot, because our PCP classes, we cannot go beyond that.
understand, ma'am. But
Yeah.
is it sufficient to have the textbook go through and then
No, it
qualify
is
the
not
exam?
sufficient. You go for some other textbooks available in the market. Basic accounting, financial accounting is available. Many authors have written. You go through and practice it. Many problems. If you first time when you are preparing trading profit and loss account, it will take 4 hours, 5 hours. When you are practicing it, then only you can complete within half an hour or 20 minutes. It will take much time. So you have to familiar the terms and then specimens where you have to write this item, where you have to write that you should know very well. Suppose this item in adjustment, if it is given what you have to do, add or deduct something, then only it will be easy for you to write all these things. Don't worry about it. Suppose answer is wrong or if you could not tally the balance sheet, don't worry. You will get mark for entering the right places. Say for an example, purchases, all the items you have written correctly. Only small mistakes if you have done, don't worry about that. Steps marks will be given. Okay.
Thank you, ma'am.
See this next problem. Second one. Uh, Previously trial balance was given. Here trial balance not given, but generally it is what are the items are given, then adjustments are given. Don't worry about it. Now let us prepare trading profit and loss account and balance sheet. See here, opening stock given in your trial balance 11,400. Then purchases 1,45,000 is given, and then wages 23,600 is given. See here, wages 23,600. And then one more thing, carriage inward is given. So one thing you have to keep it in your mind, carriage inward, if it is given, you have to write in the trading account. Carriage outwards, if it is given, you have to write in the profit and loss account debit side. Nothing is given, only carriage expenditure is given. So in that case, you may get confusion whether you have to take it in the trading account or profit and loss account. So if your wish, you write, if you are taking carriage, simply carriage is given. If you are writing in the trading account, you put note. Carriage expenditure, I have treated as an carriage inwards. If you are taking in the profit and loss account, you write note, footnote, I have taken treated as a carriage outward. Mostly we used to take carriage inwards specifically. If it is given, we will take in the trading account. Otherwise, we used to take in the profit and loss account only. Okay. So carriage inwards, you have to write it in the trading account. And then transportation, simply transportation, if it is given, we used to take it in the profit and loss account debit side. Transportation in is given. In means what? When you are purchasing raw material and bringing into your godown, you are paying transportation. That is called transportation inwards, right? Transportation out means when you are finished goods taken from your factory to your selling out warehouse or selling unit, that is called a transportation outwards, that you have to write in the profit and loss account debit side. Simply transportation expenditure, if it is given, you have to write in the profit and loss account debit side. Specifically, if it is given carriage inwards, transportation inwards, like that, so in that case you have to take it in the profit trading account debit side. Okay, then
Madam, page is not clear, madam.
which one is not clear? Which one is not clear, ma?
Yes, madam, now clear.
Abdul Hassan, this only page, ma'am. It is slowly little blur and then it gets clear slowly.
Huh?
I think internet is little slow and that is why it is getting clear very slowly.
Maybe because here heavy rain is going on here, no current, nothing. So how
Yes,
long it
ma'am.
will
I
take?
also
I
did not
don't
go
know.
to office today. Rock Beach is
Yes,
fully
that's
closed.
why
Ma'am, you
we are
can go
taking
ahead,
from
ma'am.
home by using mobile. So I do not know how long it will take internet and then charge battery charge, and 50% is available. Okay, let us try whatever we can complete this one. Then next week after 4 o'clock, 1 more hour I will take you to complete our syllabus. Don't worry about it. I will take extra 1 hour or 2 hour. Don't worry. Okay. Now, let us see this one, next one. Salaries. Salaries, what 1,420 is given. Now, transportation in you have written. Credit side, sales less sales written. Closing stock, you have to write it. And find out gross profit. That gross profit, you have to write it in the trading account debit side, right? Next, write all the expenditures in the profit and loss account. That is salaries, car expenditure, insurance premium, then prepaid insurance. See, your prepaid insurance is given in your problem. See, insurance premium 2,400 is given, paid on 1/10/2019. So here your accounting period is December, right? So December 2019. You have paid only this month, 1/10. So 10th month, 11th month, 12th month, 3 months only the current period, 9 months for next year, right? So 2020. So what, for 2,400 divided by 12 for 1 month is how much? 200, right? So for 9 months, 1,800 is the prepaid insurance, right? You have to calculate like that. So prepaid insurance is 1,800. You have to deduct it from the current insurance premium 2,400. Net amount you have to write in the outer column. The next, general expenditure, carriage outwards, rent and rates, all these things you have to write it. Then one more extra adjustment is given here. Provision for doubtful debts at 5% on sundry debtors. So provision for doubtful debts. What is doubtful debts? What is doubtful debts? What is bad debts?
Bad debts means,
Amount
ma'am,
not yet received.
Yes, ma, you have made credit sales, right? You cannot recover. You cannot collect from your debtor. That is treated as an you never collect it. You are decided you cannot collect it. So that is called as bad debts, right? Bad debts means you cannot collect in the future also, right? So when you have some debt, you may have doubt, may or may not be collect in future. So that is called bad and doubtful debt, right? So for that it is called as in when we studied our accounting convention, that is conservatism, accounting for conservatism. We have to expect for the future losses. For that, we have to create provision. Provision for bad and doubtful debts, provision for depreciation, right? So, according to our accounting for convention, we have to create on provision. So, here in this adjustment, it is given 5% you create provision on bad and sundry debtor. Sundry debtor, how much is given? That is debit sales. You have to collect it from your debtor, right? So how much debtor you have to collect? 52,000 you have to collect. So 5% is you are making provision for doubtful debts. So debtor is how much? 52,000 into 5%. How much it is? 52,000 into 5%, 2,600. You have to write it in the profit and loss account debit side, and also you have to deduct the same amount from the debtors in the while preparing balance sheet. You see your balance sheet, asset side, sundry debtor 52,000 less provision for bad debts. You have to write it. Okay, that you have to keep it in your mind. This provision for doubtful debts, there are some other adjustments also there. Bad debts written off. Suppose if it is given in the trial balance, suppose bad debts written off given 1,000 rupees in the adjustment. So in that case, how you have to calculate, how it should be shown. So bad debts written off, if it is given in the adjustment, you have to write in the profit and loss account debit side, and also you have to deduct it from debtor before calculating the provision for doubtful debts. Now this provision for doubtful debts 5% is given, right? So suppose bad debts written of 2,000 rupees is given. So 52,000 minus 2,000. Good debt is 50,000. So 50,000 out of that 5% you have to treat it as doubtful debt. So 50,000 into 5%, 2,500 you have to write provision for doubtful debt. So in that case, how to shown in the profit and loss account debit side, bad debts written of 2,000 rupees plus provision for doubtful debts 2,500 rupees, that is 5% on 50,000, right? So totally 4,500 you have to shown in the outer column. And also in the balance sheet, debtor 52,000 less bad debts written off 2,000, and provision for bad and doubtful debts, that is 2,500, like that. Okay. Then same thing, bad debts given in your trial balance, in the not in the adjustment. If it is given in the trial balance, how we have to show? If it is given in the trial balance, that you have to take it in the profit and loss account debit side, but don't deduct it for calculation of doubtful debt. Provision for doubtful debt, you don't deduct it. Simply you have to shown in the profit and loss account debit side. And also you should not deduct from the respective debtor in the balance sheet. If it is given in the trial balance, simply you shown in the profit and loss account debit side. And also sometimes a discount on debtor, if it is given, that also you have to calculate some percentage if they are asking in adjustment. After calculating this provision for new provision for bad and doubtful debt, deduct it, you have to calculate discount on debtor. If you do that kind of problem, then only you can understand. Just for your knowledge purpose, I am saying all the adjustments related to this. Suppose provision for bad and doubtful debts given in the trial balance. In this problem, it is given in the adjustment. If it is given in the trial balance, that is called old provision. So how we have to adjust in the profit and loss account debit side? That is bad debts given in the trial balance plus bad debts written off given in the adjustment plus new provision for bad, and the new provision means which is given in the adjustment 5% or 10% what you are calculating, that you have to add minus old provision for bad and doubtful debts. Old provision which is given in the trial balance, that you have to deduct it. This is the net adjustment in the profit and loss account. In the balance sheet, how we have to show debtor less bad debts written off given in the adjustment less provision for bad and doubtful debts, new provision which is given in the adjustment, you have to deduct it. And also suppose discount on debtor, also if it is given, that also you have to deduct it, and also you have to shown in the profit and loss account debit side. Okay. Just you keep it in your mind. Let us do one problem with all these adjustments. Don't worry. Okay. The next one, depreciation on furniture and machinery. Depreciation on furniture and machinery, you have to write it in the profit and loss account debit side. The commission, what is given in your adjustment? Commission 3,600 has been earned but not received till the closing of accounts. That means what? Earned but not received. You have rendered services but not received. That means what? It is a income. Commission earned but not received. It is a income. That is why you have to shown in the credit side of your profit and loss account. Now you have to prepare balance sheet, liabilities and assets. Liability side, capital, equity capital. You have to deduct it drawings, and then you can add profit, right? Net profit, that is called closing capital or liability, accounts payable, creditor, all these things you have to write current liabilities. Then asset side, fixed assets and long-term assets. Fixed assets, that is furniture less depreciation, motor car, machinery less depreciation, then equipment, these are all fixed assets. Then current assets, you have to write cash in hand, cash in bank. Debtor, you have to keep it debtor less provision for bad and doubtful debts, you have to deduct it. Then stock, consumption receivable. Something receivable is earned but not received, treated as an asset. Then prepaid
Ma'am,
invoice,
echo is
that is
coming.
current asset you have to write. Huh? Yes. So you have to prepare like this. Do you want one more problem in final accounts? Let us prepare, or can we go for next chapter?
Yes.
Can we go for next chapter, depreciation?
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
The similar way, you have to prepare. Only the adjustments will be vary from one problem to another problem. So you have to read the adjustment, what is given, what you have to do, what you should not do. So you should be very carefully read the adjustments, and then you have to do according to that. Remaining things as it is same. Okay. Then one more theory part which is I have given in this PPT, capital and revenue expenditure and receipts. What is capital expenditure? What is revenue expenditure?
More than one accounting period it can be included. It is called as capital expenditure.
Yes, very good. So more than accounting period, what you are using? Assets. When you are purchasing assets, investments, plant and machinery, these are all benefits derived for more than 1 year. Okay, for that you are purchasing furniture, purchasing plant and machinery. That is called capital expenditure. Okay, so capital, when you are purchasing capital expenditure, that will be shown in the assets. Take it as an asset, right? So when you are making current expenditure, revenue expenditure, what are all the revenue expenditure?
Day-to-day
Paying wages,
expenses.
salaries, rent, printing, stationery, current. So all these things are expenditure treated as an revenue expenditure within the benefits derived
Consumed
within
within 1 year.
within 1 year. Okay, that is called revenue expenditure, right? Say for an example, in accounting treatment, wages given for erecting your machinery at the time of purchase of your plant and machinery. Generally, wages we used to treat as a revenue expenditure will be shown in the trading account, right? So when you are making wages at the time of erecting machinery, so when you are paying wages at the time of erecting machinery is to be treated as an capital expenditure. That value will be added with your asset. Okay, machinery, say for an example, 10,000 worth of machinery you are buying, 500 you are paying for erecting that machinery. So value of your plant and machinery will be 10,500. That will be shown in the asset side. You should not show that wages in the trading account. Wages and salaries what you are paying for the production of goods and services, that is to be treated as an revenue expenditure, and also to be shown at the time of purchase of your asset, that is to be treated as an capital expenditure. Okay, then that is capital expenditure and revenue expenditure. And then receipts. When you are receiving sale of goods, is it a uh, revenue receipt or capital receipt?
Capital receipt.
Sale of goods. Sale of goods
Revenue
is
receipt.
the revenue nature.
Revenue.
Revenue receipt. When you are sale of asset, furniture, your old furniture you are going to sell, that profit is treated as a capital receipts. So revenue nature of receipt you have to write in the profit and loss account, trading profit and loss account. Capital nature of receipts, you have to write only what is the cash. You have to take it in the cash account or bank account, how much you are received, how much you are paying for that. You have to deduct that value. It will not be shown in the asset. Say for an example, asset side plant and machinery value is shown 50,000, right? Depreciation you have already deducted uh, 30,000. Its book value is shown only 20,000. 20,000 worth of machinery you are going to sell, that is 21,000 or 22,000, maybe either profit on sale or loss on sale. That profit or loss on sale of asset you have to treat it treated as a income from others, so that is a fixed asset that you have to shown in the profit and loss account. You have to write in the, if it is a profit on sale of asset, you have to adjust in the profit and loss account credit side. If it is a loss, you have to write in the debit side of profit and loss account. But sale proceeds you have to deduct it. You should not shown in the asset side value, that you have to deduct it. Okay, so this is the capital and revenue expenditure, and then capital and revenue receipts. So the theories which are related to this I have given it here. Then let us go for depreciation accounting. In another PPT I will open in few seconds. You please. Um, can you see this next unit is depreciation accounting and ratio analysis.
Yes,
Right?
ma'am.
What is depreciation?
Fall in the value of
What is
assets.
depreciation?
Reduction in the value of assets.
Reducing the value of assets because of using for producing the goods and services, not only for utilizing, but also sometimes wear and tear. So many reasons are there. That is why reducing the value of assets. So this depreciation we have to find out what is the value that is to be treated as an expenditure, and that should be deducted in the respective assets, and also we have to shown in the profit and loss account debit side. How it is to be calculated? There are various accounting methods are there. Journal entries here. Journal entries depreciation related to this I have given it here. There are various methods. See here, these are the methods are there. Depreciation methods, straight line method, written down value method, annuity method, insurance policy method, machine hour rate method, depletion method, revaluation method, depreciation fund method, sinking fund method. So many methods are available, right? So according to your syllabus, only two methods are given: straight line method and written down value method, right? So straight line value method, you see, what is straight line value method? Just you have to take the value of the cost of the assets minus scrap value. Scrap value means when you are going to sell, you will get only meager amount will be there. That is called scrap value. Suppose year. After 10th year, its value become 1000. So that 1000, if you are selling it for a scrap, that is value divided by estimated life of the asset. Suppose 10 year means 10 year. 10,000 minus 1000 rupees divided by 10 year. That is called the depreciation percentage. You have to calculate what is the under straight line method. Okay. See here, this kind of problem will be given for part A or part B. You see this, date of purchase and cost of machinery are given. Some adjustments are given, right? See, this is the machinery account. Machinery account is nothing but you have to prepare ledger account. Ledger account, left hand side and right hand side. Left hand side it is debit balances, right hand side it is credit balances, right? So machinery account, so you have to write a ledger account. How to write? On 1/4/2006 you are purchasing 60,000 worth of machinery, first machinery. When you are preparing this machinery account, you have to be very careful. Accounting period starts from January to December or April to March. That you have to be very careful. Why? Because number of months utilized in the business, you have to calculate depreciation only for that. Okay. So see here, when you are purchasing the asset, machinery account debit side, you have to write 1/4/2006 to machinery account data to bank account. That is the journal entry. When you are purchasing machinery account data to bank account. So machinery account debit side to bank account 60,000. First machinery you have purchased. So next one, 1/10/2006 you are purchasing another machinery for 40,000. So 1/10 to your accounting period is January to December 2006, right? So January to December you have to write the entry for first year. So 1/10/2006 second machinery you have purchased, that is 40,000. What is your accounting period ending? Ending period is December 31/12/2006. At the end of the accounting period, you have to calculate depreciation and write it. So how to calculate depreciation? This first machinery, how many months you are utilized? How many months you are utilized? 1/4 only you have purchased.
8 months.
9 months you have utilized.
9 months, ma'am.
9 months. So here under straight line method, a percentage is given in your problem itself. Fixed installment method 10%. Straight line method is otherwise called as fixed installment, another name. Right? So is fixed installment method, that is 10%. That means what? The amount of depreciation will be the same for every year. That means 10,000 if you are calculating, that will be the same for first year, second year and third year also. Right? So how many years, right? So by depreciation, 31/12/2006, by depreciation, 10%, 60,000 into 10%, 1 year depreciation will be 6,000. Now you are utilized only for 9,000, the 9 months. So 6,000 into 9 months, you have to calculate and write it 5,500 in the outer column. Sorry. See here, calculation I have given. 10% on 60,000. 9 months it is given, that is 60,000 into 9/12 into 10%, that is 4,500. Second machinery you have purchased only on 1/10. So how many months you have used? 10, 11, 12, 3 months. So 40,000 into 10% into 3/12, that is 1,000 rupees. Okay. So totally 5,500 rupees you have to write it in the credit side of your ledger account. By depreciation 5,500, right? So now you have, at the end of the 2006 31/12 you have to close the ledger account. So debit side it is 1 lakh, credit side only 5,500. So what is the closing balance of your account assets value? Assets value is 94,500. So that is the closing balance. Balance carried down. C bar D means balance carried down. That you have to bring in the debit side the next year. Next year you have to bring into the account. So when you are bringing into the next year, it will be the opening balance. This is the closing balance. Balance carried down means closing balance. Balance brought down means opening balance. So last year closing balance will be the next year opening balance. So 1/1/2007, the opening balance will be 94,500. See the next one, 1/7/2007, you have purchased another machinery, third machinery, that is 20,000. So you have to write it here. To bank account purchases 20,000. Is there any other transaction during 2007? Nothing. Only 2008 they are going to sell the machinery of the purchases in 2006. So 2007 no sale. So now you have to close this ledger account by depreciation. See here how you have to calculate depreciation. First machinery 60,000 and second machinery 40,000. So totally 1 lakh, right? So totally 1 lakh you have to calculate 1 year depreciation for 2007. 10% is the depreciation into 1 lakh into 10% into 1 year, right? So 10,000. Then current year you have purchased only on 1/7/2007. Sorry. 1/7/2007, 6 months. So 20,000 into 10% into 6 months, that is 1,000 rupees. So totally 11,000 depreciation you have to write in the second year by 31/12 by depreciation at the end of the year 11,000. Now you have to close this account. Debit side 1,14,500. Closing balance is 1,03,500. That will be the opening balance for 2008. In 2008, you have to write 1,03,500. Then come to the next one. You read 1/1/2008. 1/3 of the machinery which was purchased on 1/4/2006 became obsolete and was sold for rupees 6,000. The machinery was to be depreciated by a fixed installment method. Okay. So 1/4 first machinery, only 1/3 of the machinery you are going to sell. So how to calculate, how to write it? When you are sale of your asset, you have to write by cash or bank account. So 1/1/2008 by cash or bank account 6,000. You are going to sell 6,000. Now you have to find out what is the book value of 1/3 machinery. 1/3 machinery cost value is how much? 20,000, right? So what is its book value? See here, I have calculated here in the adjustments. Cost of the machinery on 1/4/2006, 1/3 is 20,000. 2006, you have calculated depreciation, that is 1,500 for 1/3 machinery. You have to calculate for 1/3 machinery. So 20,000 into 10% into 9/12. Then in 2007, you have to calculate 10% depreciation. So first year, second year, you have to deduct depreciation. Third year, depreciation will not be involved. Why? Because it is you are going to sell on 1/1/2008, January 1st itself. So you have to know depreciation will be there for 2008 for that sale of machinery. Okay, so total depreciation deducted, that is the book value. Book value of the asset is 16,500 worth of machinery. You are going to sell only for 6,000 rupees. That means what? 10,500 is loss on sale of machinery. Okay, so loss on sale of machinery you have to write in the credit side by profit and loss account, that is 10,500, right? So sale of asset is 6,000. Loss on sale of asset is 10,500. Now we have to calculate depreciation at the end of the year 2008. So 2008, when you are calculating depreciation, only 2/3 you have to take, because 1/3 already you have sold out. So 2/3 of the first machinery is 60,000. That is 40,000 into 10%, that is 4,000. Then second machinery 40,000, third machinery 20,000 for full year you have to calculate, that is 6,000. So total depreciation for the 2008 is 10,000. Right now you have to write the balance. Debit balance is 1,03,500. Balance, closing balance or book value of the asset will be 77,000. Do you understand? See here, closing balance is value of the asset under written down value of the machinery at the end of the year 31/12/2008 is 77,000 under straight line method. This is the accounting for depreciation. Okay. Do you understand this?
Yes, ma'am.
Yes, ma'am.
The same problem under diminishing balance method or written down value method. Diminishing balance means what? Written down value or diminishing balance means what? depreciation amount will not be the same. Every year it will be reducing. Say for an example, 1 lakh worth of asset you are purchasing, 10% is given. So first year will be 1 lakh into 10%, 10,000 will be the depreciation for first year. Second year, you have to calculate diminishing value. That means 1 lakh minus 10,000. So now what is the book value? 90,000. Second year value of the asset is 90,000. So 90,000 into 10%, you have to calculate depreciation for second year. So 90,000 into 10%, so 9,000. Second year depreciation is 9,000. Third year depreciation, you have to calculate 90,000 minus 9,000, so 81,000. 81,000 into 10%, that is 8,100 will be the third year depreciation. So the value of depreciation will be diminishing. So you have to calculate on your diminished value of your asset. That is called diminishing balance method and written down value method. See here, the same problem under straight line method. What we have calculated, same thing we have calculated under written down value method. First year will be the same. That is the amount of depreciation is 9 months. 10% into 9 months. You have to calculate 5,500. See the next year, second year, 2007 depreciation. How we have to calculate? Simply you can take the book value of the asset, means balance brought down. No, that is the book value. 94,500 into 10%, simply you can calculate, that is 9,450 plus current year you have purchased the 6 months, 20,000 into 10% into 6 months, that is 1,000 rupees, totally 10,450. Either you can do directly or you have to take, see here, first machinery 90, see here, 10% of 60,000 minus 4,500 for first year depreciation. So 50 book value of the first machinery 55,500. You have to calculate 10%. Second machinery 40,000, first year depreciation 1,000 rupees you deduct it. So remaining book value is 39,000. So 10% you have to calculate. So if you are calculating individually, also the same answer. Instead, very simply, easily, we can calculate under diminishing balance method on the book value. Book value means opening balance of your asset. Opening balance of your asset is 94,500 into 10%. That is the depreciation for the current year, right? So 9,450. This another third machinery you have calculated 20,000. That is 1,000 rupees you have to add with this. Okay. When you are coming to the third year, this profit or loss on sale of machinery will be different. See here, 1/3 of the machinery value is first year depreciation is 1,500, second year depreciation is 1,850. The book value of this asset is 16,650, right? So 16,650 worth of asset you are selling 6,000 rupees. So loss on sale of machinery is 10,650. Previous method under straight line method, how much it is loss on sale of asset? See here, loss on sale of asset 10,500. Under diminishing balance method, loss on sale of machinery is 10,650. Okay. Then you have to calculate depreciation on 1,04,050 into 10%. That is in this balance you have to deduct the book value of the sold machinery. Book value of the sold machinery, that is 1,04,050 minus 16,650 you deduct it. Then you have to calculate 10% on your book value. See here, I have calculated depreciation for the third year 8,740. You calculate it, you can get it the value. Okay. So under diminishing balance method, you have to do. Okay, let us close this class. Next person may be waiting. Next week, definitely I will take 1 more hour extra, and then all the problems I try to solve it. You practice by yourself. Okay.
Ma'am, kindly share the PPT slides.
PPT, it is available on the website. I cannot share everyone. You download it. Okay.
Okay.
Okay. Let us close this account.
Thank you, ma'am.
Okay, thank you.
Thank you, ma'am.
Thank you, ma'am.
Thank you.